We actually got some really exciting news overnight. This is major progress that we've been waiting for. But what we're still seeing in the crypto market is red. And what right now it seems like everybody's focused on is what Jerome Powell had said yesterday. And basically what we're seeing priced into the market right now is uncertainty. The good news about that is when uncertainty breaks, you can see some pretty exciting movements to the upside. But I do want to talk about that specifically, want to talk about what came from overnight. A couple things we're fighting right now as well. So if you are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So right now, what we're doing is actually repeating what we did just a couple weeks ago. If you guys remember, we had some green heading into that week of basically October 13th. I think technically, yeah, October 13th. And we saw some green and we saw 4 straight days of red retracement, right? That's exactly what we're seeing right now. 4 straight days of red, smaller scale, less volatility. You guys can see we're basically testing this neckline here again that we broke out of after getting rejected by our 20-day moving average. So ADA is actually in a really comfortable spot in the chart right here. This would be a spot where ADA should bounce at. I'm not saying it's going to for sure. This isn't financial advice or anything like that, but bouncing off of this longer term trend is what ADA tends to do. And we're just kind of waiting for the market to just get its feet under itself after yesterday's FOMC meeting. And for those that missed it, we got our 25 basis point decrease right on cue, but Jerome Powell created this uncertainty in the market, and specifically surrounding rate cuts in December. He said that rate cut is not a certainty by any means. So what's strange about this is we're at this point where there was a very high likelihood of another 25 basis point decrease. Hell, even betting odds were showing a potential 50 basis point decrease heading into December's meeting. You guys can see just not long ago, 91% likelihood we were getting a 50 basis point decrease by then, 8.8% likelihood of a 25 basis point decrease. And look at how abruptly this has changed. 0% chance of a 50 basis point decrease. Now only a 72% chance of a rate cut coming here in December of 25 basis points. So his uncertainty kind of shook the entire markets. We saw this in crypto. We saw this in the stock market. The stock market hemorrhaged for a very short period of time. And what you need to know is it's just a smokescreen. Jerome Powell is lying to you, frankly, because what's going to happen is the jobs data is going to continue to look like trash, and the Fed is going to continue to be reactionary to the jobs data, and they're going to have to cut rates. That's me, I'm not even a fly on the wall, and this is what I know is coming. Again, like I talked about yesterday, there's probably a 90% likelihood that we're going to get an interest rate decrease in the month of December, barring any unforeseen circumstances. The Fed is still split on what they want to do, but the data is going to tell us exactly or it's going to give them exactly what they need to cut rates again. So basically, this was a big nothing burger. We got what we needed, but right now it's about creating this uncertainty to slow down the markets. Now, that being said, we did actually have to fight some selling yesterday. We actually saw $470 million in outflows from institutions on the BTC side. On the Ethereum side, $81 million. So this is a pretty abrupt flip there. And institutional money freaked out on these words by Jerome Powell. Stocks freaked out as well. So that's why we're red. That's why we're down over these last 24 hours. We talked about the liquidations as well. But here's the thing. We actually did get some good things taking place. So President Trump announced that the U.S. and China have reached a 1-year trade deal on rare earths and critical minerals. In return, the U.S. is cutting tariffs on China, and 1-year agreement will be negotiated every year. So we have a trade deal. So here's the meeting results. Reduce fentanyl tariffs to 10%. So this is the tariffs that are reactionary to fentanyl movement, right? Overall tariffs on China reduced from 57% to 47%. China to discuss chip restrictions with NVIDIA, no more obstacles on rare earths, and China and the US to collaborate on Ukraine. This is all good stuff. Checking all the boxes, right? But yet we're still kind of stuck in this. Good Fed news, crypto dumps. Good China news, crypto dumps. Stocks up, crypto still dumps. And this divergence that we're seeing throughout the space right now is not going to last forever. That's the biggest thing that you need to know. Because again, still behind the scenes, we have seen major players accumulating. Even if on the institutional front, they're showing some of this selling. notice how their net positions still continue to increase and increase and increase. And they're still trying to do whatever they can to shake out retail. And the biggest thing that we can do is just not be fooled. We unfortunately have to sit here and weather the storm. Obviously, the meeting, the FOMC meeting went as expected, but not as expected with the big surprise from the Fed. But right now we're sitting in a spot that's just fine. Hopefully we don't get too crazy in terms of leverage here. Hopefully people don't get impatient. We just got to watch, wait, and see how the rest of the week progresses. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below, but have a great day. Catch you in the next one. Take care.